first speaker this morning, and it's none other than Dr. Edward Yardeni. Okay, 21 points down is what we're looking to open at, so no real relief. Okay, Dr. Edward Yardeni, President of Yardeni Research, with us this morning. Dr. Yardeni, always a pleasure to speak with you here at NDTV Profit. Thank you so much for your time. Let's start by talking about the proposition of the end of conflict between Russia and Ukraine. President Trump putting himself at the front and center of that. Do you think that this is an achievable goal?
I think it's an achievable goal. I don't know if it would be ideal in terms of long-term stability of that area of the world. But clearly, what we're going to see here is the United States is going to negotiate separately with Russia. And then after that conversation, the United States is going to negotiate with Ukraine. It's hard to see how you get a perfect solution from all that. But clearly, a lot of people would like to see an end to this war.
Yardeni, morning. So I read in a recent report that you'd said that you're in the none and done camp when it comes to monetary policy in the US, and I find that quite interesting because every other week you have data that points to something that might suggest that you need, you might need to spur the economy. It's not really in the docks, but it's not firing on all cylinders. So what makes you say that the Fed is done for now?
Well, the economy has been running growth of 2.5% to 3% at an annual rate, looking at real GDP. We, over the past 3 years, as you know, had the most widely anticipated recession of all times that never happened. It was a no-show recession, proving the resilience, the strength of the economy in the face of a major monetary policy shock. Interest rates rose dramatically, and yet the economy continued to grow. I think that is something we can extrapolate and conclude that perhaps some of these policy shocks up ahead here will also not unsettle the economy. You may be referring to the latest data on retail sales, which was weak, but January was bitterly cold. We had the fires in California, and I just don't believe that the retail sales numbers reflect the underlying strength of the consumer, and the consumer has been strong.
Dr. Yardeni, good evening. Neeraj here. I kind of go back to your start of the year belief around what the S&P and the US markets could do, and the small pivot that global fund managers have made towards Chinese markets, actually a fairly large pivot, but towards Chinese markets ever since DeepSeek came about. And I'm just trying to understand, there is, amongst the large markets, you've been constructive on the US. Could it be yet another year of US exceptionalism in light of the fact that China is seeing renewed focus, and expensive markets like India have come off quite significantly from their highs? So now if you have to pick and choose from this point onwards, what would be the first amongst equals and why?
Yeah, I think you're making a great point. India and the U.S. have been very strong markets. Valuation multiples have gotten high, and a lot of global investors are looking for cheaper opportunities, and they're finding some in Europe. They're finding some in China. But when it comes to the underlying fundamentals, both the economic and political, domestic stability, the rule of law, I think the U.S. and India really still stand out. So I think, sure, these other markets can have a run, but I don't think they're going to be long-lasting. And I think for long-lasting, for long-lasting trends, you're better off continuing to look at the United States and even India in terms of emerging markets.
All right. Just as you drink some of that water, Dr. Yardeni, you talked about India. And the mood right now, pretty somber as far as equity markets in India is concerned. A consistent exit of FII flows out of India, equity levels just dropping, indices just dropping. Our Q3 has not looked too great. Why do you think India is still a long-term story?
Well, I think for a lot of reasons, a young population, a very educated young population, certainly the potential to become a superpower in the area of technology. There's a lot of technological know-how in India. I think that this rapprochement between Modi and Trump to discuss the potential for much more trade between the United States and India, and maybe using this negotiating tool of reciprocal tariffs to actually bring tariff rates down in India so that the United States doesn't reciprocate by raising its tariffs. So again, I think India has a lot going for it. Certainly a big population, an educated population, plenty of opportunity for infrastructure spending. And I think all that will boost earnings for a lot of Indian companies.
Dr. Yardeni, we've spoken about broadly equity right now, but we're speaking at a time when gold prices are going through the roof.
Right.
I'm just wondering if you think that that's perhaps the best, if not one of the best plays in 2025.
Yeah, I definitely think that gold is a good place to overweight in a portfolio, and everybody's got their own view of what that means. But you know, if maybe you had allocated 5% of a portfolio to gold, maybe you need to consider 10%. But I think gold is actually pretty simple. Ever since Russia invaded Ukraine, the countries that have central banks, that the countries that haven't been friendly to the United States, that now fear that the United States will use its economic power to freeze their assets when they do take actions that are not agreeable to the American government. A lot of them want to have fewer dollars and have more gold, and so they're buying gold. And I think it's really quite that simple.
I'm wondering what your take is, Dr. Yardeni, on tariffs and the reciprocal tariffs that were announced late last weekend. And of course, we'll need to see how they pan out. I think a bit of a breather that they're not coming in immediately. And there is now some planning around it. It'll come in April. Just wondering what your take is. First of all, will it be as bad as is expected, or is this again once more sort of a warning shot more than anything else?
I think it's more of a warning shot, quite honestly. I'm encouraged by the words that have been used by the administration to describe the adjective that's been used to describe these tariffs as reciprocal, not retaliatory. Retaliatory is what we had in the early 1930s with the Smoot-Hawley tariff, when the Congress raised tariffs significantly, and other countries retaliated, and there was just one retaliation after another. To get out of that mess, Congress, a couple of years later, in 1934, passed the Reciprocal Tariff Act. So reciprocal means that the administration intends to match the tariffs that we're facing from countries like India. But before we do that, we're willing to postpone these tariffs, giving us both sides time to negotiate these tariffs down. So I think at the end of the day, we're actually going to see lower tariffs, not higher tariffs, once these negotiations transpire.
Thank you so much, Dr. Yardeni, for speaking with us. I think it would be a relief for everyone if this doesn't go into a full-blown trade war or choke up the global economy.